Hi, this is Jack from Alpha Charts with a state of the market video. Today is Friday, July 24th, 2020. This video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so this week was a interesting week. We start with the SPX as we always do. And I have my purple 23-day EMA, and the blue, light blue, is the 9-day EMA. All right. So here were the highs back in February, and we came out and we're within 2 or 3% of hitting these highs, and then we're hitting some volatility in the market. So price is now below the 9-day EMA, which is now flat. The 23 is still trending higher. So short term, maybe a little bearish. Intermediate term, still in an uptrend for now. SPX. I think losing the 23-day would be a very bearish signal, and if these two cross, that'd be extremely bearish. But we're not there yet. But there's definitely reason to take, I think, just to be alert right now. I think that's the best way to put it. All right. The Qs. So in the NASDAQ, we had the overshoot of the trend channel to the downside back in March. And now potentially we have the overshoot of the trend channel in this July period. So price did close above it, but by a penny is below the 23-day EMA. So price did close below the 23-day EMA. The 9-day is now moving down, and the 23-day is flat. So across here, and a lot of the stocks that I like to buy and trade, which are the growth-oriented stocks, a lot of them are technology-based, heavy, in the QQQ. Right now, those may be flashing a signal to be much more cautious. Monday will tell us a lot, right? Do we gap up or do we go higher? Do we move higher on Monday or do we move lower? A move lower back into this channel. I think that this area, which is about 238, 239, I think that is the next area that I would look to see if there's any support. Right now, we're not there, but the way this is looking, we may be getting there. So 238, 239, a break below that, and things get a little more dicey. But overall, things are still, going well. Look at the 200, 200 right here, day moving average. It's an uptrend. So chances are this area probably will hold and may be a buying opportunity if we get back there. IWM. So we got above this area and we kind of came back and retested on Friday on a little bit lower volume. Not much to see here. I think as long as, price stays above 144, I think small caps at the very least could chop around this area. If not, potentially get back up in and eventually test all-time highs. Dow Jones looks exactly like the IWM, which is pretty crazy, but it does. But the difference here is that we hit this overhead supply and now we kind of rejected. So now let's see if this turns back over. The volume weighted average price from both the peak and the bottom now are both literally the same, almost within $1 of each other, right? 79.62 to 79.63. And so that would be an area of potential buyers may step in, it may eventually be around 8,000, we'll say. So that's the Dow Jones. But what was interesting, if you look at the I-100, so the was iShares Trust Global 100 ETF. So it's basically the largest companies in the world make up this ETF. And, there were some pretty big move to the downside right here. So we have a flat 23-day EMA in the CTF, and we have a rolling over 9-day. Definitely something that I'm taking notice of. If price can stay above, we'll call it 54.30. I think everything's fine. Everything's good. If price continues to roll through that price level, it'd be very hard for the market to move higher if the biggest companies in the world aren't moving higher, or at least sideways, right? You either need sideways movement or upward movement, but if they're not doing either, if they're moving down, it's very hard for the market as a whole to move higher. So let's look at the RSP. Now, the RSP is the equal weighted S&P 500, and we're going to divide that by the SPX, right? And if I could type right, it'll come up. And there we go. So RSP, SPX. And let's just get rid of some of this noise out of here and just look at the pure chart. All right. So equal weight versus cap weighted. And, we had the big move down, right? Here was the start of COVID. And we got to this area. And you see there's some potential support that's been showing up right in this area, right? Now, this may be some kind of head and shoulders on this chart. I don't know yet. We'll find out. But if the equal weight chart starts to underperform or continues to underperform the cap weighted, I think that's a problem for breadth, right? So that's a breadth issue. You don't want to see narrowing breadth. You want to see broadening breadth. So if RSP now breaks higher, or the ratio breaks higher, then that'd be a widening of breadth. So it's definitely something I'm watching for a breadth study. Right now, we'll call it inconclusive, and there are, I guess, higher lows and higher highs off this July bottom, but really since COVID started, it's been just a choppy mess. The value line geometric index is another breadth index that I like to watch, and so far this one's looking okay, right? So this one is moving a little bit higher here. Again, we kind of hit this overhead supply back in June, and we haven't beaten it yet. So this is the level, 493. We'll call it 500. Price needs to get above 500 for me to feel really comfortable that things are okay in the market. We're not that far away from it, but we'll see what this does. Right now, we're in, it's an uptrend from the bottom, right? So we'll see what happens. But I think that 500 range, that's always been the important area, and that's what we're watching for. Looking at credit spreads. Credit spreads are okay. Now, so there's a lot of volatility this week, but we didn't see credit spreads start to widen. If anything, they narrowed a little bit. So that is very positive. We didn't take out this low in June, right? We didn't take out the June low yet. So, that's not all clear, but we're still showing lower highs and lower lows, and this remains to be seen right here. If we could take out this June low, then that's a lower low and things are good. If this spikes back up and goes higher, it's a different story. So we'll see. But credit spreads right now, not showing any kind of stress that I can see in the markets. The VIX. The VIX, still elevated, right? We're above 20. We're definitely above, for me, this 24 and a half, 25. We're stubbornly above it. If we can drop below 24, I think that's a much better range. And I'll be honest, I would love it below 16, but I'll take below 24 right now, for now. But so the VIX, still elevated, right? Still a little cautious. Let's look at copper futures versus gold futures. Now, this is, if I can type right. Thank you. All right. So this was really interesting, right? We went back and looked. There's your 09 lows. We broke below it. Then we had, stood below 2-3 months, whatever it was, March, April, May. In June, we came back above, broke all the way out. And now This was the August 2016 low, broke down back below it, this area. So I don't know if this is just another lower high or if this is the start of a new uptrend. It's just some kind of, we're going to come back and maybe retest this area and then bounce. But copper futures versus gold futures, gold has been doing amazing, and we're going to get into that in just a few minutes. But this is something to watch, especially with this new kind of push lower here. So that's a more cautious looking chart. Lumber has been amazing, moving higher. Definitely, home builders are on fire right now, and lumber is showing that it is, an uptrend. I think lumber overall being an uptrend makes me more optimistic in the medium to long term. In the short term, maybe we get some wiggles, maybe we pull back, maybe we retrace. But medium to long term, with lumber going higher, I think it's hard for the market not to go higher. XLF, looking at the financials. I always like the financials because they tell a story on the economy, right? Where we have a huge part of the economy is the financial sector. And, it's just been a choppy mess. I mean, there's not much more to say about the financials. They can't get anything really going, right? They had this move up, they had earnings, things were starting to look good, but it's just a choppy mess. Some lower volume here. So I'm not sure which way. It's starting to get kind of tight right in here. So it looks like a move is coming. I just not sure which way that's going to go. There, overhead supply, this $30 area, that's where I'd worry about, but that's a pretty long way away. So right now it's just right in the middle, just trying to figure itself out. Looking at semiconductors. So here's semiconductors, and we broke out this high, didn't quite get up to this 170 level. I thought we could, but we didn't, at least not yet. It kind of stopped right on the 23-day EMA, right? Kind of held its ground and recovered a little bit. So yeah, the 154-ish area, 152.50, those are the areas. This right here, I think, is what has to hold. You have the 9-day kind of trapping it to the top, 23-day on the bottom. Even if it retraces a little bit more, this 152 to 155 area, that's the important one. We break below that, and now we got to start looking at some of these levels down here. Again, if semiconductors are going down, that's a bigger problem than if they're going up. I mean, AMD had a huge move today, right? AMD, huge move. NVIDIA, NVIDIA was up too. Wow, it was actually much lower earlier in the day. I hadn't checked on it. So yeah, NVIDIA, Lam Research, big recovery. So SMH, it may wobble around in here, maybe retest the 155-ish, but overall, still looking pretty good. Good call ratio. Let's go back to a line chart, and a little frothy, right? This is my over here. Market is never going down, and then you get weeks like today where people get a little bearish, not overly bearish, but a little bearish, right? This was very bullish. So they're less bullish, but still pretty bullish. If there is a pullback, looking for things to get to this line would be interesting to me. But we're not even close to that. I mean, right now, this is just in a bullish range. So things are fine. This is just so far a shakeout. But the interesting thing is silver. Look at silver. I mean, what a beast. This has been an area of importance since 2008, right? There was resistance, support, resistance, right? Resistance. Now broke through hard. And that was a major breakthrough. And I bet if we look at volume, look at this volume. Just people are piling into silver right now. But it's literally vertical. So for me to be involved, way too much potential risk. If it comes down and tests this $19 level, right, and it may not even get back that far, but that 19, 1970, even 1975 would be interesting spot. 1950, 1975 would be a really interesting spot for like almost like a retest. But that's a straight up. And so that is something that makes me more cautious. If people are piling into silver, that could be an issue. Looking at gold, once again, straight up. Huge bottom. I had posted this chart on Twitter earlier this week. Maybe some kind of inverse cup and handle. I'm sorry, inverse head and shoulders. If this can maybe retrace a little bit and come back around, that would kind of finish this off, then a breakout. But this straight up move right here, maybe a little too exuberant in the metals. I'm not sure. We'll find out in the next week or two. But a lot of people piling in, a lot of volume showing up there. Now let's look at SPX TLT just for some color there. All right. So as you can see, we are now below the 23-day EMA on this ratio chart. Let's get rid of this volume. Moving sideways. We just call this a sideways motion right now. It hasn't broken down yet. If this gets below 18, I think that there's way more pain in the market to come. Okay, 18 and a quarter. That has been the area. But as long as this is just chopping around above 1850, I think that that the uptrend is still intact. If we break below 18, that's a problem. Let's see what else. Okay, so we are going to end. Actually, I want some. Yeah, let's end with this. Let's go back and end with this chart I've been watching forever and ever and ever. It's a monthly chart, and I know today is only the 24th, so we have another week left. But I don't think it's going to change all that much over the next week. So here is the monthly chart of SPX going back to the 1932 low. And I've showed this chart before, so it's not a new chart, but I've been following it for a while now. And, we don't know what's going to happen in the market. Obviously, nobody does. It could go up, it could go down. But this area, the 16 to 1700 area is very, very, very interesting to me. Right now, that'd be around 50%, right? 50%, which would be an extremely, extremely, extremely bearish case. And I don't think that's going to happen. I'm not saying that's going to happen, but this area right here, a retest and then a move higher, is a possibility. There's so much going on as far as elections and coronavirus and all the news out there, and we don't know exactly how or when they're going to start pricing in the future, right? They could be pricing in, hopefully they're pricing in it right now, but you see on the monthly chart, we're having some issues. So let me take this a step further and pull up the relative strength index, right? So the RSI shows momentum, and this is what actually is making me more bearish on the longer term, right? So, and when I say that, I don't want you guys to think that I'm bearish overall, because I'm not, because there's nothing saying it. But this right here, this momentum divergence, to me is troublesome, right? I would really like to see this kind of break this trend line and move higher on the monthly chart, but because they're monthly charts, they take forever to really move. But when you look at this, we're having some issues up here. We're showing this bearish divergence over here, right? So we have this, you could say that this is the up, right? We have bullish run here, bearish divergence here. This is what keeps me cautious, right? This is the chart that keeps me up at night. If this bearish divergence comes true, then there's going to be some issues. And if you look at it here, there was a bearish divergence, here, right? And then you end up getting, this type of move down. That was a pretty significant move. A little bit of a bearish divergence right here, right? Boom, boom. And then you had a big move down. Bearish divergence here, right? Here. And then you had this type of volatility in here, which is, again, that was 2015, 2016, right? That was still a rough patch to go through. So, not obviously as bad as 2000, 2001, or 2009, but still, that was a rough patch. So those are, this is the chart, the SPX on the monthly chart that probably, if any chart keeps me awake at night, this is the chart. As I've been watching it now for a while, way back in here, for over a year, I've been watching this chart, and it's just amazing how the uptrend from 1932 low is just so clean, right? It's just a clean uptrend. And we've hit it 1, 2, 3, 4, 5 times. So why wouldn't we hit it again in the future? Is it going to be, next week, next month, 5 years from now? Nobody knows. Just something to be aware of. There is a pretty significant size divergence showing up in the monthly chart, and we will go over this more maybe in when I go over my long view video later this weekend. I like to look at weekly and monthly charts, and we'll delve in this a little bit further. But as of right now, I mean, I think that the uptrend is still intact, but I think the volatility means to be cautious at this point. If we can make a new high, then you can measure risk again, and we're pretty doggone close to that area now. All right, hope y'all were safe this week, did well, and stay safe out there, and we'll talk to you later. Bye.